Today we have an absolute treat of an episode, an interview with Will Clemente, who is a college whiz kid genius who is pioneering a new generation's approach to on-chain metrics analysis. That's right, he's taking the actual data from the blockchain and trying to produce actionable results for investors to look at to understand the health of the crypto markets. This is something that was pioneered by Willy Woo and has now been taken into a new generation with Will. So you guys are gonna definitely love this episode. It is full of information about on-chain metrics, the history of these indicators, and we lead up to analyzing exactly what's going on right now based on what the data coming out of the blockchain is saying. If you guys are excited, destroy that like button for my guest, Will. Make sure you follow him on Twitter. The link is in the description. Remember, each and every comment is entered to win your own hardware wallet. As always, if you want more episodes like this, make sure you subscribe and put that bell notification on. Remember, there are scammers in the comments pretending to be me, and with that said, let's dive into this awesome episode with Mr. Will Clemente. Thank you so much for coming on the channel, Mr. Will Clemente. You have just absolutely taken the crypto Twitter and content worlds by storm lately with just epic on-chain metrics analysis. We want to know all about you, on-chain metrics, and what's going on, and we're super happy to have you. So thanks for joining us.
Hey man, thanks so much for having me on. I'm stoked to be on the show.
So first of all, who is Will Clemente? Where are you in the world, and how did you get into this crazy crypto thing?
Yeah, sure. So I'm a rising junior at East Carolina University, which is in North Carolina for anybody who doesn't know. I came in as an entrepreneurship major, switched to management, switched to finance, computer science, and then came back to finance. So like I'm kind of all over the place, but I really got into Bitcoin kind of in mid to late August of last year, mostly because I kind of took this like traditional finance approach to it where I was into value investing, which for anybody who doesn't know, that's like the style of investing that Warren Buffett's been made famous for. And when you do that, what you're basically doing is you're taking like the cash flows of a business and then you're projecting it. You're almost trying to draw an imaginary line, projecting those cash flows out into the future based on the past, prospects of the business. And so like there's a reason why value has underperformed growth and momentum stocks. And so for anybody listening, like growth momentum stocks, you think of like the FANG stocks, right? Netflix, Apple, Google, Facebook.
The sexy stocks.
Yeah, exactly. There's a reason why those have been going up and value has been underperforming. And a lot of that has to do with the amount of money that and liquidity that the Fed is pumping into the monetary system, right? So it's become less about the actual valuation of the company and more about just where the liquidity is sloshing around. And so understanding that give me, the light bulb as to why, value investing is not the best place to be right now. And also led me to look for what is the solution to the problem, right? Like, because what you're essentially doing with fiat is, you're building a house with the ruler stick that's changing all the time. So, what's the solution? What's the hardest, soundest form of money? And then, of course, most people in the space have a similar story, but that's what, led me to Bitcoin and understanding all the monetary properties that it has, et cetera, et cetera. So that's how I really got into it.
That's pretty awesome, and I would say that that's a very, very uncommon route because most people get into crypto, as I did, hearing from a buddy that just made, a bunch of money out of nowhere, and you go, what is this stuff? And then you get drawn in by the potential for making money, and then you get really excited and you become educated about concepts. Like I wasn't educated on sound money before coming into this industry. I was passionate about new products and tech. And so I gravitated towards the sort of new altcoin space. But I learned in the process about sound money, economics, and the problems with fiat, essentially. So I think it's pretty crazy and very cool, actually, that you started with the monetary principles. And so it's actually not surprising now to know that you ended up on this very, data-driven, sound approach to Bitcoin, which is where you find yourself. So I think that's a really good transition into the question of what are on-chain metrics, which is what you do very, very well.
Sure. So, like in traditional finance, the way you kind of analyze things is obviously like fundamental analysis. You can go through earnings reports and, dig through the actual, underlying fundamentals of the business. Or, when you're looking at the price, you can do technical analysis where you're, watching the price action, you're drawing lines on charts, you're looking at moving averages, indicators like, the RSI, MACD, all these things, basic technical analysis. But, what's unique to Bitcoin is that we have this open ledger. So, you can basically have X-ray vision into what's going on in this little digital economic system, right? So that's what on-chain metrics are to me. It's basically a way to look into, what's fundamentally going on. What's the behavior of the investors looking like on the blockchain? And this is unlike anything in traditional finance. And, there's times when, technical analysis and is saying one thing, right, and on-chain is saying another. And, you would have no idea that perhaps, one example over the last couple of weeks is you've seen really strong accumulation on chain. Price actions look like garbage. And then all of a sudden we had 10 straight daily candles. So I think, that it kind of gives you an edge into looking at, what's actually going on. What are whales doing? What are the OGs doing? What are the market participants that, are resemble, the smart money? What is retail doing? Like all these different ways to like analyze this little digital economy can give you a better sense of perhaps, what's next. Because at the end of the day, any analysis that you're doing on markets, whether it's TA or on chain, it's all just analyzing human behavior and then trying to make predictions based off of, previous patterns in human behavior.
Yeah, that's absolutely bang on. We're all trying to analyze what's happened to figure out what's about to happen. And obviously there's a saying as old as time, if you want to know the truth, follow the money. And that's just this amazing superpower really in crypto land that we don't have in the legacy system. And there's so many examples of us not knowing where the money's gone in traditional finance, but we know exactly where the money goes in Bitcoin. Could you talk a little bit about like what are some of the major tools that you use when you start to look at, okay, you mentioned them just now. We look at what the OGs are doing. We look at what the strong hands are doing. When you say that, like, what does that mean? What are you looking at?
Yeah, sure. Let me screen share real quick.
Let me make sure I give you.
Make it a lot easier. Cool. Okay, just let me know if you can see it.
Yep. Yeah, I see it.
Okay, cool. All right. So yeah, we can go through like a couple of very basic metrics, and then I think this will kind of help people kind of just get a good like foundational understanding of stuff. So the very first on-chain metric that was ever created was by Willy Woo, and it's this very basic ratio of the transfer volume that's going through the network and the market cap. And so what this is essentially trying to do is create something, let me pull it up, something very similar to like a PE ratio with stocks, right? Like what's the fair valuation of this? And, Bitcoin doesn't have earnings. What Bitcoin does have though, it's a monetary network. So the way you can kind of measure it is looking at the amount of, usage of the network, the amount of money that's flowing through the network. Use this one instead. And so NVT is basically giving you these over undervaluation signals based on the amount of capital that's flowing through the network. So what you'll see is like at cyclical peaks, like here in 2013, here, this is a little noisy back kind of at the beginning because some of the data isn't super accurate at the beginning of Bitcoin. But you see we had a peak here, 2019. And so like this can basically give you an understanding of, in relativity to the amount of capital that's flowing through network, is Bitcoin, is the market cap overvalued or undervalued? So that's like the very first on-chain metric that was created. I don't use it a whole lot, just because I think it's so widespread. So the information asymmetry, if you will, isn't really there. Just because, it's so commonplace now.
So before you move on from this, you're looking at this yellow line overlaid over the Bitcoin price, and you see on the left here a scale of 0 to 200. And you're saying if you're trying to analyze whether it's over or undervalued, where would be like the mean? Where would be like if people are looking at this, how are they looking at this orange chart to get anything useful information out of it? Obviously, we see the peaks, we see the valleys, but what like for example, what are we looking at right now? Like what is the chart saying about where we are right now?
Yeah, sure. So like it's all relative. So it's not necessarily, I would say, like there's a certain time, like there's a certain point in the ratio that it reached in 2013 that I'll be looking for it to reach here. It's more so like, is NVT trending down over the last couple months, or is it trending up? And that can kind of give us an understanding of like where we like the situational, um like where we are right now versus trying to like make some kind of historical comparison to like a previous measure in the ratio. But I was going to show this as well. This is Willie Woo, who, like I said, created it. He took that and then created a price variant off of that. To be honest, I'm not sure the math that he used for this, but this green line is the NVT price. So using NVT, I think he used like some moving average of it or something, to come up with this fair valuation price based off of NVT. And then down here is the NVT premium. So it's showing how over undervalued is the market cap actually in comparison to this NVT price. So this is
Uh,
like one more actionable way to use it.
Got it. So, what it looks like to me is that the NVT price has mostly trailed the Bitcoin price over its history. It looks like throughout that 2018 period, the actual fair market value, according to NVT, which, by the way, network value compared to transactions, meaning it's a ratio between the value of Bitcoin, I'm guessing by market cap here, versus the amount of transactions or the value of those transactions on the network. So if there's $1 billion sent between two people in a day, or between the network in a day, then that would extrapolate into a certain amount of transaction value to the network value, right?
Right. Exactly. Yeah. So this is, once again, like this isn't something I use very often, just because, like I said, it is so old. But this is just like an example of there's a lot of the stuff is just very simple ratios, and if you just understand how the dynamic between the two metrics works, then you can kind of branch off and create other variants of the stuff. But that was something that was kind of like the bedrock of on-chain analysis.
Yeah, and it's very well
This
used. My friend of the channel, Mike, over there at Bloomberg, the head commodities analyst at Bloomberg, actually uses the NVT a lot, and
Oh, cool.
he stands by it. And throughout 2018 and 2019, he was saying, "Hey, look, NVT is showing that we've probably bottomed and we're probably looking bullish." So definitely a really cool indicator.
Yeah, for sure. This next one is realized cap. So this is another fairly early on chain metric created by Nick Carter. It was kind of like theorized by Pierre Richard, but actually created by Nick Carter. And so like what this basically is it's an average weighted price of Bitcoin based on where coins are last moved. So like Roger Ver, he bought Bitcoin way early on at like $1 or something like that. So let's say he bought 100,000 Bitcoins at $1. So that's $100,000 of realized cap that's added. Now, granted, let's say he never moved those coins. Now today they're worth whatever 3.96. I'm looking at my tab right now, $3.96 billion dollars, somewhere right around there. But in realized cap, it's still only $100,000 that's added because that's the last time the coins moved. So what this can basically tell you is like it's for anybody in TA, they're familiar with a VWAP, a volume weighted average price. This is basically that in on-chain terms. So it's telling you, what's the actual like underlying capital flowing in? What's the price or market cap that's supporting? And so that's what that is. But where this is useful is David Puel and this guy Murad. They both were founders of Adaptive Capital, which is no longer an operation, but they had a lot of interesting work. And this is one of their more famous creations that they had. It's comparing the realized cap, and it's just a simple ratio comparing the realized cap to the market cap. And so what this is basically telling you is the current market price or market cap of Bitcoin overextended or oversold in comparison to the actual capital that's flowing into the network. And so you can get from this these overheated spikes or buying zones down here, and where this you can get a better visual of this by comparing. Let me pull this up. I'll show you when you overlay the realized cap and you overlay that with the market cap, you can actually visually see where when we go into these capitulations in the bear market, the price actually goes below, or the market cap actually goes below the realized cap. And so by definition, you have capitulation. So sometimes it takes a second to load. Okay, boom.
So how can realized cap present a higher dollar figure than the actual price? Because you'd imagine that you couldn't pay above the price of Bitcoin, but it seems as though, I guess this line is below the price, but it seemed before as though it was above the price. So I was a little confused there. But so you're saying this yellow line is saying, look, this is how much people have paid for Bitcoin, essentially, right? This is what the actual amount of money in real terms that people have paid and the average of those prices. Because what we see in the market cap is people are trading, they're trading, and that day, at that moment, the price can spike up a bit.
On the margin.
Yeah, the price can spike up a bit, but maybe someone only spent a few $1 million to move the price. That doesn't change the hundreds of billions of dollars in activity here. So what you're saying is that yellow line says, look, this is what people have paid, right?
Right.
And
exactly.
And that's super useful, right? Because we don't see that in the news. We don't see that in the price action. You need to use on-chain metrics to find this. And in some ways, it's like its own category of data, right?
Yeah, that's exactly how I would say it. So previously what we just looked at was a ratio between the market cap and the realized cap. So how overheated is market cap compared to, at the end of the bull market, you have this huge speculative premium that's built up on the price. So it goes way overheated compared to realized cap. So you see that here, right? Like we were looking at a ratio before, but if you're actually just looking at the space between the two, this is where the ratios peaked, right? Here. And then you also get these really good buying zones whenever price goes below the realized cap. So March 2020, here, right? Because by definition, the market, the market's in capitulation because the price that Bitcoin's trading at is below what the average price that investors are paying for those coins.
And on average, obviously, we know culturally in crypto and Bitcoin specifically, there's a very long-term HODL mentality here. So when the actual trading price on average is below what people have paid in average, you're saying most of the time you're seeing people are selling at a loss. Thereby, this is a capitulation. This is people giving up. And those are the essential, galactic generational bottoms that we look for, right?
Yeah, exactly. Also, some of it has to do with the hash rate and the delay in hash rate coming on and miners capitulating as the price goes down. But yeah, in a general sense, like I'll pull this up. This will compare the amount of supply held by long-term holders to short-term holders. And you'll see this really interesting dynamic whenever it gets pulled up. What you'll see is in the bull market, long-term holders are distributing while, and that's the smart money in the space, while short-term holders are selling. And that, I consider that the dumber money, if you will, in the space, for lack of a better way to put it. So here I'll throw in price too, so you can get a visual of that. And you'll see also in the bear market, conversely, when price is heavily discounted to its fair value in terms of on-chain, that's really when the long-term holders are buying the heaviest. And that's when the short-term speculators move out. Because Bitcoin isn't pumping like crazy anymore, and it's not fun for them, so they have no long-term conviction, and they just pack everything up and leave, and take their losses and move on. So
it's like that saying that bull markets make you money, but bear markets make you rich, because if you have the thesis and the conviction to be counter-cyclical, to buy when people are really, really scared, that's when you get those amazing, amazing opportunities. But when the bull market's on, everything's pretty frothy, right? So you might make 10x, but that's after someone's already made 50x, right? And so there's all this gravity. And as we know, as we've seen from the last couple of days, it's pretty hard to hold on to those 100x gains and really realize them fully. Most people don't. Most people hold them up and they want more, and then they hold them right down. And then, like you said, they don't have that long-term conviction. They don't have the thesis. And so they just, when things get tough, they go.
Yeah, I want to, what you just pulled up is actually a whole nother chart, which I think your audience will actually find interesting now that you brought that up. Let me see. This is the net unrealized profit loss. So this is showing, like you said, at the top of the bull market, people don't want to take profits. People get really complacent. So what you'll see here is, like, when we get into these like euphoric blow off tops, people have really high net unrealized profits. So like their portfolio is pumping, and like they're probably refreshing it every hour or two because it's pumping so much, and they think Bitcoin's going to the moon and it's never going to have another correction, so people just completely stop taking profits. The market gets really greedy, and so that's what you have here. You have these really overheated zones where the ratio of profit of unrealized profits goes way up because people aren't taking those profits. And then what happens is then that leads into the capitulation bottom. And then when we get to the bear market, then you have these big, deep capitulations like here and here.
I can't help but notice here that we didn't reach this blue zone yet in this bull run.
Yeah, that's something I've taken note of as well. Other metrics show that, like kind of like the more cyclical indicators, but on a lot of these, we never really reached any real overheated zone. We got close, but we didn't quite reach those like historic overheated levels on a lot of these like broader metrics.
So I think that's a really interesting transition here into, and first of all, thank you guys, or thank you so much for laying out for the audience what on-chain metrics are, what are the history of them, the early sort of base building blocks here, like the NVT, and then the NVT ratios, and then market cap to realized cap, and all these kinds of building blocks that help people understand the data from the blockchain and how it relates to the price data, which is of course what we're all wondering, like where's the number going, up or down, right? And it seems as though what I'm looking at just based on these colors, which lay it out beautifully and simply. I was joking to my buddy Eric Crown, who's a TA expert, that we just need the stoplight. Give me the red, yellow, or green here, and this really has that. And you see that the blue there should be red, but the blue up there shows when things are really, really, really toppy. But we didn't quite get this flashing signal of a top this time. And so the big question on everybody's mind is, did we top or did we not top? And is this just a longer cycle? And so I guess the question is, where are we now based on what you're seeing with these on-chain metrics?
Yeah, absolutely. So a lot of this stuff isn't actually in my thesis as to why, aside from like that, the fact that we haven't really gotten overheated in this in MVRV, what I've really been focusing on is something that's unique to Glassnode, and that's Glassnode's entities data. So kind of like Glassnode's kind of unique competitive advantage, I guess, is the fact that they have this proprietary like clustering. They have like algorithms and stuff. And they also have a whole team of data scientists that's also filtering through this data. But what they do is they basically cluster together different addresses forensically to say, okay, this looks like one person, and they're able to do this to look at different sizes of holdings, right? Like, so they can look at whales, retail, they can look at their spending behavior, all these different things. And so a lot of the entities data goes into my analysis. So this is like this data, Glassnode's very kind of let me share, but it's like $800 a month. And this is what you're really paying for, is this entities data here. So what this is this is the a liquid supply ratio, liquid supply shock ratio. I created it with Willy Woo, and what it basically is a ratio of the liquid supply. So the amount of coins that are held by these blockchain entities that have a very low spending history. So they take a lot of coins in, don't move a lot out. It's a ratio of that to the highly liquid and liquid supply. So these are, speculative traders. These are the people that are going in and out of the market all day long. And so it's basically tracking the movement for in very layman's terms, the movement of coins from weak to strong hands. Everybody likes to talk about, the diamond hands. This metric is literally tracking.
It's the diamond hands, the diamond hands indicator versus the paper hands indicator. I love it.
Yeah, pretty much. I'll zoom out further so we can look at this in terms of what happened in 2017 as well.
Yeah, that would be great.
Yeah, here we go. Oops.
And so the higher the blue line, the more diamond handed.
Yeah, exactly. The higher the blue line, essentially, the more coins are moving to those strong hands. So here we go.
Got it. So interestingly, it actually grew in fits and starts throughout 2017 and peaked at the peak of the market. So there was the most strong-handed, the most diamond-handed holders at the peak, which you would think towards the peak, it would get diluted, right? But it's kind of counterintuitive for me. But that's pretty interesting to see that essentially you have the the peak of the diamond hands at the peak of the market, literally. And then I guess when it also helps when these guys sell, you know.
Yeah, it's time to GTFO. When you see this thing going down, it's time to jump ship. So yeah, this is a just very basic, like more real time way to look at it. And then this is a variant of nobody else has this ratio. People might have recreated it after I tweeted it, but so this is something I made. Let me turn this off so there's no grid lines. There you go. This is something I made to look at, like, what's the broader trend of like supply shock in a market, right? So like we're looking at the real-time movement, intraday kind of thing. Like what is that in a broader sense? Because I think that's what drives the market. Bitcoin's scarce, right? So when Bitcoin becomes when there's less coins available on the market, when there's more coins held by these strong holders, you basically get this supply shock, and that's what kind of gives the momentum for the next run up in the market cycle. So looking at this, it's this RSI run over the 30-day change of this. So like, for example, today's the 4th that we're recording. I don't know when you're going to post it, but a month ago on the 4th, what's the difference between today and then? So you get the net change, 30-day net change, and then you're running a 365-day RSI over this. So,
if you guys are lost, it's okay. So am I. But the what we're trying to understand here, it goes back to the diamond handed. This is another diamond hand metric, right? We want to know, Are the people holding coins going to dump them, or are they here for the long run right now? Is essentially yet another way to look at it, right?
Yeah. In layman's terms, sometimes I start rambling about the technicalities. In layman's terms, this is showing like the waves of supply shock or lack thereof in the market. So like when you look here, right, and we're initially kind of had this run up before the main bull run, we plateaued in like mid-September. You had a bunch of coins became liquid, so that was a sell signal. But then you went from a sell signal all the way through the top of this RSI. So counterintuitive, like usually in RSI, when it goes over, it's oversold and it's time to sell, and then oversold you buy. But this is the opposite. So when it goes above the RSI, it's actually a buy signal. But anyway, so this is showing, right, you see this wave in the RSI, and this is like the wave of supply shock that then the speculative premium comes in, and you have these arbitrage opportunities like with Grayscale that all push capital in to push the price up higher. But it really came in my opinion really comes from here. And then we can look at 2017 too, but you see the same thing at the beginning. You see this big initial wave of supply shock. Then we came back down into mid-May when we had this capitulation, came back into a sell. So you had a bunch of coins that became liquid. You had like 145,000 coins came onto exchanges in like 3 weeks. So like insane amounts of coins that were moving out from what had previously been considered these strong hands. It turned out they weren't. What you had though is this
so hold
reaccumulation.
Before you go too far here.
Yeah, sure.
You said this just now. You had this wave of strong hands. Turns out they weren't. What do you make? What do we make of that? How do we? Because it seems like we're all trying to understand where the big, strong-handed money's going, but then we have something like May, where, as you said, it turns out they're not so strong-handed. What does that mean? Was there just a feeling that everyone was it the minor capitulation in China? Was this a black swan event? Is that the excuse for this, or is this that moment kind of similar to 2018, where these guys just kind of start, or entities rather, just start kind of offloading?
Yeah, it's a really good question, right? Because I'm saying like these are strong hands, and then they're selling, so they're like, how do you distinguish that? And so like the way that I look at it is there's a lot of money that came in a market neutral way at the beginning of the bull market. So they came in to do the grayscale arbitrage, or they came in and to do like this cash and carry trade where you're longing spot, shorting the future, and just capturing that premium. So I think there's a lot of capital that came into the market that was just sitting there to capture those spreads. And so the on-chain data, we're looking at the spending history of these wallets. And so while they were sitting waiting to collect this premium, I think some of those entities were recognized as a liquid, but then it turned out that once those opportunities went away, you saw this coinciding drop in whales, which is of course like representing like institutional size capital. So in my opinion, like seeing some overlay with like the Grayscale premium going away and starting to see a decline in whales and in the illiquid supply, I think there's something there. And then also when you look at like just the Elon FUD and China FUD, I think it it scared away a lot of new, kind of what resembles like institutional money. Because who sold was, a lot of people were saying it was retail. It actually wasn't. It was young whales. So it was like, when you look at the age of the coins and stuff, it's been trending down since February. But also, like, you can look at when a lot of the coins were exactly sold from, and it looks like kind of late last year, early this year. And then the by size, it's mostly actually been whales that have been selling. So that's the way I see that, just because of the overlay with some of those opportunities that went away that would have, kind of had a more market neutral position. But yeah, so like we've seen this reaccumulation here. So like a second wave like this, but this one has just been pretty much just straight up, versus this one you kind of had some wiggle room in here, right? This has just gone straight from this sell to back into what I consider the supply shock area. So just looking for follow through here.
So yeah, that's a great, lots of great points. Honestly, you are quite a smart kid, man. You should be teaching a class, not taking these classes over at your university. But I guess the final question is, given all of this data, the sort of fleshing of the young whales, as you said, which kind of goes hand in hand with the thesis that we have, which is that over time, these assets appeal to bigger and bigger buyers, right? But those people aren't necessarily indoctrinated, right? They're not necessarily like one of us in that larger sense. They're just saying, all right, well, there's a bullish asset class. Let's long it, right? And then, the Elon FUD, miner stuff, all this stuff, they go, you know what? We're okay. We're good. Like we're not that dedicated. And so
it's just a number on the screen for them.
Yeah. You more like just typical kind of like trading houses or institutional buyers. And so I guess the question is, given that data, given what happened in May and this massive recovery, yet, from price action standpoint, we're still very much range bound. And, I don't want to use the term, we're not out of the woods yet, but that's kind of how it feels, as though we're not quite out of the woods yet. Where do you see the midterm? Because short term, everyone knows, really hard to predict short term. Long term, we all agree, we're going to Pluto. But what's happening over the next sort of 3 to 6 months based on what you see out of the on-chain data?
Yeah, sure. So like you said, the short term can be a little difficult to predict. This is kind of my outline for the short term. I drew this like 3 days ago. So far so good, but I was looking for some kind of like retest of the middle of the range and then see if we can break out above 42. And then I think it's pretty much just air between 42 and like 49.50. We'll have some trouble getting through there, but I'm watching to see if we can bust through 42. And, this daily candle is looking good. You have a bullish engulfing candle today. So, in the short term, this is kind of what I've been expecting to play out, but who knows, maybe I'm wrong and we go sideways for another week or whatever. But I suspect, just seeing the really strong accumulation in both the liquid supply we looked at, but we didn't even get into the exchange flows. Exchange flows are really strongly bullish over the last week. We've had a lot of coins moved off the exchanges, which of course is, showing that people are buying and moving those coins into custody solutions or whatever it may be. Doesn't mean they're never going to sell ever, right? Because like we had a lot of coins that moved off exchanges at the beginning of the year, and then they came right back on 145,000 in 3 weeks. But you are starting to see at least, some heavy buying again in those flows. So I suspect over, the next month, I think you'll see much higher prices. I'm expecting, we'll see Bitcoin kind of at like 15K in the next month or two. I'm sorry, 50K.
Changes the thumbnail title. Well, thank you so much for that. We'll look for this bullish price action, and we won't hold you to it with your nice caveats. What would you say for those people who want to learn more about what you do, about on-chain metrics analysis, and digging into this wealth of information that we have here in crypto, but that we're really blessed to have, but other markets don't have? How should they start if they want to learn more about this?
Yeah, sure. Great question. A lot of this is like just self-learning. Excuse me. That's kind of what I did. I just watched a bunch of podcasts and stuff from like Willy Woo, or there's David Wells, another really smart person in the space. And just like looking at all the YouTube videos and podcasts they've done and just like re-listening to that. But If you're looking for like actual, like some kind of mini course or something, if you go on Glassnode up here in the top right, this little tab called Academy you see here. So if I click on that, you'll see there's all these different metrics, some of the stuff we talked about today, like here's MVRV. And it's this whole basically glossary of different topics for you to dig into. So they spent a lot of time putting this together, and I think it's a kind of like a great introductory tool.
Awesome. Well, Will, you have certainly schooled me, and I'm sure the audience has learned an absolute ton. Guys, make sure to go follow Will over there on Twitter. I'll link his Twitter in the description. And just, I keep learning from you, and so thank you so much. We'd love to have you back on the channel soon to give us an update.
Thanks, man. I appreciate it. This was a blast.
Thanks, man. Well, there you have it. The rise in diamond hand holders is something that cannot be denied. This was an awesome episode. Big thanks to Will. Make sure you follow him on Twitter. Make sure you smash that like button if you learned something. As always, if you want more episodes, make sure you subscribe and put that bell notification on. My name is Elio Trades. I thank you so much for watching, and we'll see you very soon on the next episode.